G'day everyone, welcome back to Pete's Investing. Today is April 6, 2023. This is the US S&P 500 update. You can see here on a daily, 4 hourly and the hourly, the daily is still in a downtrend, although it did make a little bit of a false break on the CCI 1500 with a moving average 400, whereas the 4 hour and hourly are both in uptrends above their moving average. So what does that look like on the price charts? Let's have a look. So again, zooming out, you can see there it's still in decline and it's respecting this declining descending trend line, and it's actually forming this, it's confirmed after yesterday's video, it's confirmed this dotted line is now a key resistance area, and I'll change that now. I'll change it on the 4 hour chart, but at the moment that's bouncing down from that resistance area and it's following this descending trend line. So what that looks like on this key Fibonacci retracement on the daily, you can see there initially it broke above the 60% and it went higher, but again we're just going to be mindful of the lower time frames, and that's what it's doing at the moment. And it's also respecting this decline in the daily CCI 1500, so only short trades predominantly, avoid long trades at this point. On the 4 hour chart, you can see there's also this wedge that was forming, this ascending line, so it may well come back down and respect that ascending line, but it's also coming down and bouncing off that key. Let me just delete that. I'm getting all these messages on my phone as well. Just move that to that level. So that's our new resistance area. We've got to show that respect. So you can see there, and if I move this, delete that Fibonacci, and I'll show you more clearly on the hourly chart, but I'll do it on this one as well. If I pull the Fibonacci retracement from that low to that high, you can see there we need to see it for further declines and going short positioning. And this is on the 4 hour chart. We're still in an uptrend, don't forget, but down in a downtrend on the daily. We need to see a break below the 61% to be more bearish. So at the moment it's sort of stuck in this range, so very carefully avoid going long or short unless you want a bit more of a risky trade. So we want to see it break further to the downside on the CCI 1500 to be more bearish in alignment with the daily time frame. At the moment it's coming towards this 23% retracement, and that's at 40.62. So on the hourly time frame, and I have drawn that Fibonacci retracement already on that. You can see there we're still in an uptrend on the CCI, so avoid going short. And what I will do on this one, just give you some trading ideas. I've got here some fractals. So in terms of going long, had you been going long during this period, again I'll drill down on some of these, the more recent long trade would have been that break above the fractal there, and I've got there a 1% target. So just be mindful if you do get caught out, and at the moment it's dropping down and it's showing you a couple of potential short trades. So just be mindful of that. When you do hit key resistance areas, it often reverses. So if you knew about this potential resistance area, and I showed you that building hours ago, you'd avoid going long in case it did drop, and it is dropping at the moment. So I wouldn't be going short until this breaks to the downside, but especially if this the price breaks below the 61% level, it's a more definite line, and it breaks below this ascending trend line, then it's more of a definite shorting positions. And I'd use the fractals as entry potentials. To understand how to properly trade, if in case you get caught out against you at the top level there, reference some of the links below to understand how to properly trade using the average down approach. Subscribe and like the channel, and support us more on Patreon, and see you in a future video.